Okay, we're now going to delve a little bit more into decarbonisation, which is something that we talk about all the time, of course. Our moderator is Alexandros Prokopakis, Executive Director of the International Bunker Industry Association. On the panel, we have Vincent Willems, Finance Manager of Marine LNG of Shell. We have Stergiou, Sustainability Director of Capital Clean Energy Carriers Corporation. We have Spyridon, Zolotas, Senior Director of RINA. And we have Alexandros Damianidis, who's a partner of Watson, Farley and Willems. Alexander, please.
Thank you. Thank you, Kevin and Mia, for having me, having IBIA at the Marine Money program. I'm Alexandros Prokopakis, the Executive Director of IBIA. For those who don't know, the International Bunker Industry Association is a global membership platform that represents all sectors and all stakeholders in the bunker marine energy sector. We are a strong 500 members association from 70 countries holding an IMO consultative status position. IBIA membership opens the doors to a vast network of industry professionals fostering unparalleled collaboration and business opportunities. IBIA champions the development and implementation of industry standards and best practices, significantly enhancing transparency and professionalism within the bunker marine energy sector. As we move to greener fuels, the energy transition is a key topic, and bunkers are more relevant to shipping than ever. As an association, we are fuel agnostics, and we believe in a future multi-fuel mix. We are firm believers that decision needs to be made today in order to be able to catch the targets that we have for the next couple of years, 2040 and 2050, that the IMO have set. If decisions are not made today, things are going to be harder in order to achieve these targets due to time constraints. With that said, we have an expert panel to go off, so in 2 minutes, altogether, no, in 2 minutes each, please introduce yourself, your company, and what you believe is the road for decarbonization of shipping. Vincent.
Yeah, hi, my name is Vincent Willems. I'm the finance manager of Shell Marine LNG. And actually, Shell's a pretty experienced operator in LNG. We use LNG for our own vessels. We supply it as a bunker fuel. And actually, we're also a decarbonization partner for our customers. Shell started with trying to work out if LNG could work as a marine fuel in 2012 already. And then in 2018, we performed our first bunkering. Since then, actually, we've grown to the largest global LNG bunkering network, containing 12 LNG bunkering vessels. And we've performed over 2,000 bunkering operations in 26 locations in 12 countries, in the Americas, Europe, and Singapore. But actually, we're still learning. So LNG, how we use LNG ourselves, but also how our customers experience it as a marine fuel. If I think about decarbonization, I think about it in two facets. The one is the existing fleet, which is mainly conventional fuels, where of course blending FAME will be a key lever, but that's finite. So it's really about the new build vessels. And I think there, Shell sees LNG as really the most pragmatic way forward.
Good afternoon, ladies and gentlemen. First of all, I'd like to thank Marine Money for organizing this excellent panel and for inviting me. It is not very frequent that we hear about what financiers do to incentivize their clients in relation to decarbonization. So that's a good opportunity. Of course, we had the owners panel that touched upon it, upon the subject. But I would also like to tell what we see as lawyers, as we do a lot of this kind of work. For those who don't know me, I'm Alexandros Damianidis. I am a maritime partner of global law firm Watson, Farley and Willems, and I'm based here in our Athens office. We at WFW are considered to be experts when it comes to the legal framework of decarbonization. And this is on the basis that we do actually a lot of work on that sector. We have assisted in formulating the legal framework of the Poseidon Principles a few years back. We are involved in other projects, including issuing and updating, as you may know, the Sustainability Imperative Report, which is the result of a thorough market research. And thanks to the contributions of those of you who have participated in that project. Of course, we are also assisting many of our clients, whether it is financiers or ship owners, in relation to sustainability-linked loan facilities and green financings. Thank you.
Hi, I'm Stergiou. I'm the Green Shipping and Sustainability Director of Capital Clean Gas Carriers. We consider ourselves a first mover company. We transport mainly LNG at the moment. We do own a fleet on dual fuel vessels since we have adopted the LNG as a fuel. We have one of the biggest new building programs currently. We do expect another 16 vessels to be delivered in a row. All are in LNG fuel, dual fuel. And publicly listed company, and we are here to present what are we doing in terms of decarbonization and, of course, discuss the part of the financial component, which is very critical.
I hear a lot of LNG, Alexandros, so I think you are agnostic, but you have to start, let's say, counting on this. So this is Spyridon Zolotas. I'm from RINA. RINA is a classification society, probably you know, one of these people creating a lot of confusion on where things could be financed, because there are so many storytelling today by my fellow colleagues, competitors, call it as you like, let's say, from classification societies and other players, that I think they cause a lot of confusion on where to invest money, and we heard all this day today that money there are and should be invested properly. So thank you, Kevin, and thanks, Marimane, for having me here. I hope I will contribute to this discussion.
You will, and that will allow me curveball. So I'll start with you and come back to Vincent, because the audience needs to know. We had a much anticipated EMEA 82 last week, 2 weeks ago. People were expecting some outcome. What's your take? Any good news for us before we get into the real discussion?
They say no news, good news sometimes. I don't know. It's not exactly no news. No, the MEPC 82 of the IMO has a slow process of taking decisions, and there is a reason for that. But also there is a lot of criticism on that, because, you know, this slow decision process of the IMO led also other entities, the EU, for example, to take faster measures that create a lot of confusion. We have ship owners among us, and every day companies are struggling to cope with all these regulations. We say it many times, fragmentation is killing the business, is complicating the business. We need global discussion. So IMO were not many news from the MEPC, but they decided on one thing, that they will better look to this metric, is the CII, the carbon intensity indicator. Vessels today, as you know very well, are rated like refrigerators out of this CII indicator. There are many things there that can be criticized. This is not many people say, I will take openly, it's not correct in many cases. So IMO decided that this is to be reviewed. They will have a working group, a correspondence panel that will review the CII, especially for long period stay or port stays of vessels, cruise ships remaining in the ports. You know, for these vessels were very wrongly ranked. And they decided also some technical and financial measures, like the global ETS, as we call it. This is the greenhouse gas fuel intensity index, that will be also the way how to not yet decided if it will be a levy or any other means, how vessels will pay for what they emit. But I have two numbers I would like to share with you. It was also discussed that 28,620 ships, 28,620 ships reported fuel consumption for 2023. It has been 211 million tons of heavy fuel oil or diesel fuel oil or this kind of fuel anyway, which is similar value to 2022. 93.5% of this is heavy fuel oil, low sulfur fuel oil, and etc. 6.5% is LNG, and LNG is picking up, but anyway, nothing about other types of fuels. That's something I think is thought-provoking.
Well, thank you, Spyros. I think, Kevin, you will be happy that you have a lot of headlines for the reporters in the room for tomorrow. We talk about refrigerator system, pink flamingos, and then Botox. So I think good headlines. To catch and see what Spyros said, just in mind, for last year, shipping has a reduction in emission opposed to aviation. Industry that has and increases emissions. So even though we are very looked at as an industry, we are performing better. We have some challenges ahead of us. And Vincent, please, I mean, you have the privilege of seeing it mostly from the selling side, but you're also charter ship owner from Shell. So what do you think is the change that we need to see in order to meet the decarbonization targets for the future and for the global and Greek fleet?
Yeah, thanks for that question. I think the answer needs to be in alternative fuels. And well, let me start with some good news. I think this year over half the new order book was actually consisting of alternative fueled vessels. But that's not enough. We need to do more. And actually, if we want to get the shipping industry on a net zero trajectory, we need to have more dual fuel vessels. We just heard in one of the previous panels, options are key, and I think also dual fuel vessels provide an optionality which is actually really key to the energy transition. Just ordering these dual fuel vessels goes globally, but also, of course, for the Greek fleet. But then, which alternative fuel should you choose? Actually, there Shell really sees LNG as a pragmatic way forward. To decarbonize to net zero, because you can start with LNG today, and later on you can seamlessly blend in bio-LNG and synthetic LNG, just how much you need to meet your decarbonization targets. Also, the nice thing about starting with LNG as a fuel today is actually that you already have 23% or up to 23% of carbon emission savings if you compare it to fuel oil. However, LNG is for us seen as really the pragmatic way forward, and that's also being adopted in the market. So if you look at Q3 of 2024, 60% of all new builds were actually a dual fuel LNG from a gross tonnage perspective, which we really see as confidence of the market in LNG as a propulsion fuel.
Thank you. Stergios, I mean, you make a point, and we all know you have a stand about dual fuel LNG, but what are the options available to ship owners today? I mean, I'm guessing you just didn't go for LNG. You looked at it and you make the cautious decision on how to move forward.
Yes. First of all, we have to understand by the term now available what it means. So it has to be availability if we are talking for equipment, certified equipment, crew training, bunkering, hazard safety operations, and of course offering in order for equipment to be able to take quotations for multiple suppliers in order to have a competitive pricing. So there is a spectrum of things that should be taken in mind in order to say that something is available. Now, for reducing emissions compared to conventional vessels, there are several solutions that are covering machinery, propeller, the hull. Now we see also many cases with wind propulsion, which is also It has a bonus in the regulations FuelEU Maritime. So if we combine all these, then we achieve, let's say, something like 10 to 15% reduction. For the conventional fuel vessels, again, we have biofuel. It is a solution. Subjects also to be cost effective, the price. On top of this, when we are talking further for biofuel, we have, of course, as we said, the LNG and the extra lifetime that this type of fuel has through the bio-LNG and the e-LNG, synthetic LNG. It is very clear, and the importance to understand is that with today's machinery, you have an extended life of the vessel. Directly through LNG or bio-LNG or e-LNG.
The botox they said before.
Yes, it's not. it's actually it's called what we say also in our company. It's due to the fact that we have invested in this type of fuel and we have adopted it. We consider our fleet future-proof because even for biofuel, you have to do a compatibility study just in case. Bio-LNG, you don't need it. It's exactly the same type of a fuel. So 23% reduction in emissions, of course, high pressure machinery. It has an extra capex, but as we will see forward, it will worth the investment.
Thank you. We heard the regulations, we heard buying, we heard selling, so let's see financing, because it is important if we want to move forward. So Alexandros, from your experience, are financiers doing anything to incentivize this switch and the road towards decarbonization?
Well, I was speaking yesterday evening at the Marine Money speakers dinner with a couple of financiers, and you know, I actually told them what the topic of this discussion would be, and they said, well, we actually don't have any incentives ourselves to incentivize our clients to do anything. So apparently, it's not that lenders have anything to gain from you know, this kind of discussion. The risk profile of their facilities apparently doesn't change at all. Nevertheless, I can think of at least two main tools which they have been using to incentivize their clients to decarbonize. These are, first of all, the Poseidon principles, which have been mentioned earlier, and of course the sustainability-linked loans. Now, in relation to the Poseidon principles, we currently have 35 signatory lenders from all over the world, and they jointly represent approximately 80% of global shipping finance. So you can imagine that, you know, they represent obviously the majority of shipping finance. What they do basically, for those who don't know, is that they collect verified, third-party verified data, which the shipping companies are providing, verified by external third parties such as classification societies, regarding fuel oil consumption and the CO2 gas emissions. This is in relation to the vessels that they are financing, so that they can actually report on the average level of CO2 gas emissions of their portfolio vessels, of the vessels which they finance. And the intention, of course, of all this exercise is to assess their alignment with climate change objectives and improve their individual scores, in line, of course, with the IMO standards. Now, for this to be achieved, obviously, they need to rely on the transparency and the impact of their business on the climate objectives. Now, to get there, obviously, they need to finance more environmentally friendly vessels. And they discuss with their clients, as far as we know, methods to achieve these objectives: the reduction of oil consumption, the reduction of CO2 gas emissions, and they expect from shipping clients that they would do better every year in line with the trajectories which they have in place. Obviously, the companies which comply with these trajectories, the reduction trajectories, they have easier access to financing from all these signatory lenders to the Poseidon Principles, and of course on improved terms. Normally, I'm talking about pricing terms. Now, turning to sustainability-linked loans, we have actually documented a significant number of sustainability-linked facilities over the last few years, 5 or 6 years, with many financiers, not just those which are signatories to the Poseidon Principles, but also with those who are not, including Greek banks. So I have done sustainability-linked facilities with at least 2 Greek banks. The way they work is basically that the lenders set certain KPIs, one of which is the reduction of CO2 gas emissions, and they set a percentage for every year of the duration of the facility, and if the reduction is achieved, then there is a reduction of the pricing of the facility. Normally, the reductions I see are in the region of 0.5%. So these are
Half a point is half a point.
these are the pricing element. If those KPIs are achieved, and there are certain facility agreements which also increase. On which the margin also increases if the reporting on the CO2 gas emissions is actually worse or equal to the one they had last year. So obviously, these provide significant incentives for shipping companies to try to decarbonize, hopefully.
Thank you, Alexander. Stergios, not much in financing as I get it, and I think most of us know that the first review Poseidon Principles was under par of what they expected, but it's left to the market to see what's going to happen. So do you believe, do you see, or should they be a premium, what we have heard in the market as a greenium about the early movers and you know, how this will be paid off in the decarbonization?
Yes, as we said, investing, being a first mover has a significant capex, let's say 10 to 20 million in order to equip your vessel with DF dual fuel LNG machinery. So there is a significant cost. What do you take back for this? Now, now with the regulation, and let's take for the example the ETS and the FuelEU Maritime, a vessel that is doing a cross-Atlantic voyage will have to pay penalties or costs up to 2045, that reaching the levels of 25,000 compared to a conventional vessel. No, let me put it correctly. So we have the LNG vessels versus a conventional vessel. The LNG vessel will pay 25 to 30,000 per day less expenses, which is a significant number. Now, this is based on the FuelEU or ETS regulation, which is 50% of the emissions. Imagine that if we go to IMO, which will account for 100% of the emissions. So there is a significant regulatory cost behind that, that market charterer should pursue in order to charter efficient vessels. So eventually, soon, we do believe that there will be a premium embedded in the freight. And the kickoff of this process will be when the whole system will start paying from September 24. Then everybody, we are going to realize what is the cost of the effectiveness, and then we will have it embedded in the freight. Now, this is from the charter side. From the financial side, yes, indeed, as Alexandros said, sorry, there is with financial institution support. We see also schemes, EU schemes, Innovation Fund with subsidies, a first mover with good ESG scoring have access to financing with good conditions and terms. However, as you said, it is not something like a component that you should take into your account during the decision for an investment. It's more like a recognition or award, I mean, the basis points that we discussed. In order for this to be enhanced and go towards the correct way, the regulatory bodies, of course, and the governments should further assist the banks or whoever are on the financing side to support the decarbonization. Obviously, we do expect when the regulators are going to start collecting all this money from the penalties and the costs, somehow this money to be recycled within the industry. And we think that financial institutions are the correct mechanism to do the whole process.
This would give the missing incentive
yes,
to bankers.
Yes, obviously, yes. And the final part of being a first mover is obviously the attractiveness in the investor's perspective. There is a correlation between a company which is leading in sustainability with good scoring, ESG scoring, and improve share performance. And obviously, being a first mover and a sustainability leader provides confidence to investors because they are considering you a low risk against climate change and future-proof company.
We'll come back to Alexandros about that in a second. Vincent, what is the operating reality of decarbonization? Cost, availability for green fuels? I mean, the perception out there that's expensive, and living in the bunker reality is we know that right now shipping is consuming the lowest end of the barrel, the cheapest product available. I'm guessing that's changing, but what's the reality out there?
Yeah, I think there's multiple elements to that question. Let me start with costs, then operability, and then what's actually needed for shipping to decarbonize further. First thing I think that we see is that actually the industry is starting to realize that green fuels will be more expensive than fuel oil. And that not all green fuels will be available at scale to shipping, because it's going to different industries. If you look at all of the alternatives being considered, Shell has done extensive analysis into which fuels are now really the most cost efficient to decarbonize. And what we see is that that's really LNG followed by bio-LNG. Also, based on data from the IEA, actually we see that there's enough sustainable biomass available for the shipping industry. Then the second part about operability, I think it has two elements. One is infrastructure, so it was already mentioned. So LNG, fossil, bio, and synthetic. Actually, it all is just liquefied methane, at least majorly, which means that you can use the existing infrastructure, the gas grid, the liquefaction plants, also for your biofuels and the synthetic ones. So actually that makes it very efficient and already means that the infrastructure is there at scale already. I think the second thing about operability of LNG in this perspective is actually that in the EU you have mass balancing. So that means that the entire European grid is operated as one. So you can have locally produced biogas put into the grid somewhere, and then actually you can take it out via virtual liquefaction at a completely different area. So again, really cost efficient. Two more things that you actually need to make this happen, and I think was referred to a few times already. One is actually global regulations, so it's needed to incentivize for development. And I think the last thing is offtake. signals also from the market. So bio will mean investment will be needed on the long term. That means there are signals needed for the market for biofuel demand as well.
Something that shipping is not used to. So this is another hurdle. We need to move very, very fast. So let's close with two very quick questions. Alexandros, sustainability linked loans that Stergios mentioned. Is it only for listed companies, or do we see any in private companies?
No, it's not only for listed companies. Actually, the majority of the sustainability-linked facilities we have documented, we have structured and documented, are for listed companies because it's a good tool for them, apart from being able to have better terms in terms of pricing and all that. It's also a tool to demonstrate to their investors what they do in their business to decarbonize. But we have also documented a number of facilities for privately owned groups in relation to sustainability-linked loans. It's basically shipping groups which have a plan in that respect. They have they issue sustainability reports. They actually want to do something about it. So it's not only for public companies.
Spyros, 1 minute. I know you can talk for an hour, but
No.
Carbon capture, it's been discussed and we hear it more and more. Is it here?
Oh my God, this is all really long. Listen, Alexandros, everybody, we have said many times today, and has been said by everybody, availability of fuel is number one, price of fuel is number one. These are fundamentals. Then we have another fundamental. We have many ships in the water. We will continue to have these ships in the water for some long time. Now we said even the life of the vessel is extended. You know, we offer even life extension programs now, certification with sophisticated mathematics, let's say, to study the residual life of the vessels going longer due to the market. But this is a reality we don't have to forget. In this reality, we need new fuels that are not yet available. We have two things. LNG is one available fuel. Carbon capture, that you mentioned, is another technology by using available fossil fuels and go forward. I don't want to go to technical details, but we have post-combustion on the funnel, which are many studies now. We don't really yet have in the commercial, let's say, use. We have studies on that through amines, through physical absorption that you need, you make calcium or something like that. We have pre-combustion as well, carbon capture. We have some very nice idea that can be coupled with what Vincent said for LNG. And so there are a lot of things that we are going to see and it's happening now.
Thank you. What is very attractive to finance conferences is that at the end they ask, what stock or what shipping segment you would bet your money in for the next few years. So we'll have the same fire question, no, not even 10 seconds. If you had to put your money in one fuel that exists today, which one would be for the next 10 years? I'll leave you for lunch. I think you mentioned the word 3 times. So, Spyros.
I said already, I think LNG is really viable, and if you couple it with a reformer, for example, to produce hydrogen on board, could get you even further down the road, up to 2045.
Salt in the wound. Stergios.
I think I have positioned on this. It's LNG. We know how to use it. We know how to operate it. I understand for conventional ship owners, this is a tricky part because, you have to know how to operate it. So it is the type of fuel that has the most potentials.
Alexandros?
Well, I have to agree with with the others as a lawyer.
Vincent, I'm going to ask you just because you're on the panel.
Yeah, it's LNG, bio-LNG, synthetic LNG.
All right, that's it. Thank you very much. Thank you, gentlemen.
Thank you very much, Alexander, and to the panel on decarbonisation. We're now going to have a presentation, Fuel EU Maritime from Challenge to Opportunity. Our presenter, Ralph Garn, who's the Managing Director with Ocean Score. Ralph, please. Thank you. Do I not have the screen here? Say again. I don't have the screen here. There's a screen there. works for you. Oh, you can use it.
Okay, thank you, Kevin. I have to improve. I have only a screen there, so bear with me if I look over there once in a while. FuelEU Maritime, a new regulation. ETS started this year. FuelEU Maritime started last year. And I think, or I hope I can also answer some questions that were addressed to the panels. Before I do that, a little bit more about scope. So we are all about compliance in shipping. The company was founded in 2020, but really started last year when we decided to grow the company. We did our seed financing last year, and our Series A we concluded 2 months ago successfully, just within 3 months. Our solutions are mainly around helping shipping companies manage the EU ETS, but now also FuelEU. But we also provide data to insurance companies and banks. We have calculated for all 33,000 vessels the Poseidon Principle alignments that insurance companies and bank uses. And that's information that they get from us. Our backers are companies like MSC, Döhle, who are investors in OceanScore, Portline, but also venture companies like Motion Ventures or the Dock, etc. FuelEU Maritime has a timeline. It started actually with submitting the monitoring plan this August. In 2025, so starting from January 2025, shipping companies have to start monitoring their fuels. And it is going to be similar as you will see, or as you already see in EU ETS, for every, maybe not for every voyage, but for every time charter, they will report the fuels used on the vessels and basically calculate compliance balances, surpluses, or negative balances, and then report to the charterers and expect them to pay for it. In 2026, so until the end of March 2026, the information needs to be submitted to the EU and to the verifiers. They verify on a vessel basis whether vessels have a surplus or a negative balance. Then they have 1 month to decide whether they want to pool vessels, so offset negative balances of certain vessels with positive balances of other vessels. And once that is done, the pool gets certified, and the vessels who still have a negative balance will have to pay a penalty. And once the penalty is paid, you will get a FuelEU certificate of compliance, and then you're done. There are some parallels and some differences between FuelEU and ETS. So FuelEU is all about using low greenhouse gas fuels. So it's really moving the industry towards climate neutral fuels. And the parallels are that the same vessels are affected, roughly 12,500 currently in the EU, that the same regional logic is implemented with very few exceptions on outermost regions. The data streams are the same, so there will be noon report information submitted to the class society. They will verify the voyage emissions and voyage fuels, and that is basically then being used to calculate the penalties. The DOC holder is responsible, which is very important because only the DOC holder can generate surpluses or penalties, or negative balances actually, and pay penalties. And there's a phase-in concept. It starts with a 2% reduction in 2025 from the baseline, but these reductions really, really increase over the years, a lot more than you see on ETS, and also a lot more than you see at the trajectories of Poseidon principle or CRI rating that IMO uses. The difference is that it's a penalty system. So you don't pay carbon taxes like EUAs, you pay a penalty for too much greenhouse gas emission. It's also no polluter pay principle. You cannot, by law, charge the penalties to the charterer. It has a different matrix. We heard that, I think, in the second panel this morning. It's not about the emission of the vessel once the fuel has been bunkered. You have to consider all the emission of the extraction of the fuels, the transport of the fuel, so it's well to wake. And it's calculated in energy, so it's CO2 per energy, and it has different discount mechanisms, and you have the opportunity to bank, which means save surpluses, or borrow from the future, like you borrow from a bank, but then you have to pay interest on it, and you can pool. So there are some parallels and some differences. The main difference is this regulation is about bunker emissions and energy, while ETS looks at carbon emission and the currency is EUA, so a carbon tax. Here we look at the well-to-wake emission per energy, so it's CO2 equivalent per energy. And well-to-wake means that you have to consider all the emissions from exploration, processing, so refineries, transport, et cetera. And you also have to include other factors like, and that's why it's equivalent, like methane, and N2O, et cetera. And it's the total energy used. There's a reference value, and it's the 91.16 grams of CO2 equivalent per megajoule. That's the reference value from 2020. The first reduction is only 2%, so the new target in 2025, starting in January 2025, is 89.3 grams of CO2 equivalent per megajoule. And this is an important number because we will have to figure out what is the grams per CO2 per megajoule of different fuels. And the deviation is then used to basically calculate penalties or surpluses. And the penalty system, so we are now talking about CO2 equivalent per megajoule, but that's not how the penalty is charged. The penalty is charged by converting the CO2 per megajoule into very low sulfur fuel equivalents. So another calculation. And then you pay basically for every ton of VLSFO equivalent, if you have a negative balance, 2,400 euros per ton. Calculated, if you calculate this, you use this, and the EU calls it the basic formula. It is split into two components, the well-to-tank component, where you calculate the CO2 of all amounts of fuels, which is the CO2 times M, and then you adjust it for the lower calorific value, which is the LCV. It's just the heating value of the fuel. And then you add the energy that you buy from electric. So if you have onshore power, you have electric, but since the electric onshore power energy is always considered zero emission, it is added zero. And then you add the tank to wake, so that's what we already know from EU ETS. Pretty much the same formula. It just considers methane slip and other components to it, but this is really how you calculate it. You really don't have to do it yourself. we or also class societies do it for our clients. And then you apply discounts. Wind propulsion gets a discount. Ice class, especially when sailing in ice, gets a discount. OPS, onshore power, gets a discount. And RFNBO, so you get a reward factor for renewable fuels of non-biologic origin. We have heard a lot about securing biofuels. Before we get to the biofuels, this chart shows basically how conventional fuels will be behaving in FuelEU. VLSFO is the benchmark, 91.7, but if you use that, you will pay a penalty because the new benchmark is the 89.3 on the bottom left corner in 25. So that's the benchmark. VLSFO is above the benchmark, you pay a penalty. MGO, same. LGO, auto, penalty. Fossil methanol, even more. Fossil ammonia, way more. And fossil H2, even more than that. So none of these fuels will help you in FuelEU. They will create huge penalties. Then you have and we talked about this a lot, LNG and LPG. LNG and LPG actually help you. And when you look at LNG auto, 82.9, LNG diesel, 76.1, and LPG ethane, 72. So that actually gets you almost towards 2040, which was a question in the last panel. And what you see on the bottom, which is really interesting, that the reduction in 25 is 2%. In 30, it's 6%. And then in 35, it's 14.5%, which means the greenhouse gas intensity requirement really drops down and gets really, really tough to meet the requirements. For biofuels, there's a different picture. Now, we have circled most of the biofuels in red because they are feedstock-based. Feedstock-based biofuels do not help you with FuelEU. Only waste-based biofuels. So if you have olives or rape oil and you press it into frying oil, you cannot use the first press of oil in your vessels. You can use the rest. So if you press it the second time, the waste, then it's considered waste. But the first pressing is not. So all the conventional, or all the new biofuels, palm oil, methane, palm oil, open effluent, so before methane capture, palm oil with methane capture, rapeseed oil, soybean oil, sunflower oil, it's not going to help you. It only helps you once it has been used for frying purpose. And this is a really interesting thought, and we learn here every day as well. What happens to all the frying oil now? On average, frying oil is used 7 days. And after 7 days, new frying oil is used to fry French fries or chicken. And will the frying companies now only fry for 3 days and sell the oil as waste oil to shipping? This is a feasible thing because they might make more money on selling waste frying oil than they make on selling chicken or French fries. Because when you look at biodiesel, animal fat, and especially waste cooking oil, which is the frying oil, it has a value of 16.38%, and that's the only waste at this time, waste oil, that gets you to 2050. Or almost. See, in 2050, the requirement is 18.2 CO2 equivalent per megajoule, and only waste cooking oil meets that target. Okay, I'm almost done. So the thing is, you calculate all that, and then you generate a compliant surplus or a deficit. If you create a surplus, you have the option of banking it and use it in the future. Or you pool with other vessels and sell to vessels that have a deficit. If you have a deficit, you pay the penalty at 2,400, or you join a pool if you can buy a surplus for less than 2,400. Or you borrow from the future if you know already you have new vessels ordered that have a better balance. The EU ETS is a pay-as-you-go. The Fuel EU is a surplus or deficit system, and it's all about choices, commercial choices you make for the future. So on ETS, you just pay EUAs, and here on Fuel EU, it's about improving your compliance balance by bunkering with a bunker, with using shore power, different propulsions like wind, where you get an incentive, etc., etc. But the most important thing is aligning across stakeholders, because the owner, the charterer, and the DOC holder will have to negotiate on strategies for the future. The charterer buys the bunker, the DOC holder has to pay the penalty and create the pools, and so you basically have to sit down and figure out how each party is incentivized. And then the owner has the increased maintenance cost of the engine, so they will also want to have something of it. The average cost on ETS is 220. The penalty in the beginning of Fuel EU is 62 per ton bunker, but if you do it right, you generate a profit of 300 per bunker. Now, there are a few decisions to be made. What bunker to use? Would you use shore power because it's zero emission, but you need then connection on your vessel and also in the port? Will you use wind assistant propulsion because it really helps you? Managing, will you pay the penalty? Or do you want to borrow at a 10% interest? Do you want to pool with other vessels? Or do you want to bank? And banking is a really good option because we saw that the decrease in 2030 is 6%. We expect a surplus market next year because it's only 2% reduction. In 2030, we will have a huge deficit market. And if you have banked your surpluses, you might be able to sell them at a really high price. Now, just a quick example, and you will have this presentation afterwards. So normal container vessel, 12,000 tons HFO, 1,000 tons MGO. It's not compliant. It will have a negative balance of 328 tons of VLSFO. The total penalty will be roughly 800,000 euros. If you now replace HFO with B25, 25% of waste bioblend, you will have a 10% lower Carol heating value. And then if you buy it for 1,200 a ton, then you will have a new greenhouse gas intensity of 75.5, a compliant surplus of almost 2,000 tons of VLSFO equivalent, which, if you can sell it in the pool for 2,000 euros, you will make a nice profit of 4 million instead of paying a penalty of 800,000, or you can internally set off 86,000 tons of LFO. Now, when you compare this, buying waste oil versus HFO, you have more than just one effect. The one effect is you have higher bunker cost, of course, but it's like in this example, 187 more bunker cost. But you have a lower fuel EU penalty because you have a surplus, so negative 395, and you also save on ETS. You will have less carbon cost, and the net is 263 for replacing HFO by B25, and for this example vessels, it's 3.2 million more at the end of the year. Almost the last slide. What you need to do is basically simulate your business together with the other stakeholders. Assess what is the baseline, so it's basically how the ship behaved in the past, then calculate or gain transparency on what your greenhouse gas intensity is, what your compliance balance is, and what your costs are. It's not the fuel cost alone, it's also your ETS cost, and it's your bunker cost. Then you need to decide on how to improve. So it's simulate different bunkers, different onshore power scenarios, different propulsions, compare the greenhouse gas intensity on the different scenarios, and analyze vessel per vessel or fleet or subfleet per subfleet the outcome, and then manage it. So when you know what your balance negative plus your total cost is, then you need to basically choose your options. Either you pay the penalty, you pool, you bank, or you borrow. You create pools with different, like you can only put one vessel in one pool, but you can create different pools with different vessels. And then you assess your impact on the entire company. And I think this is the last slide. It's so easily to build a complete fleet EU exposure assessment. It's like you should do that. We provide a planner for that to calculate all the scenarios for all parties involved. Then you get the full cost picture. You will have the reports to discuss with all stakeholders of various scenarios. And then we have a team in place now that supports you with workshops. So it's not that we really want to sell a tool. We sell our knowledge, and the tool is part of it. Yeah, and this is basically my presentation on FuelEU. Normally, this is way more than an hour, so this was just an overview, but I hope you got some knowledge on what is coming in the next couple of months. Thank you very much.
Thank you, Ralph. And if the next panel, the last panel, can come up, please. Okay, so we've come to the last panel of the conference. It's the theme of our conference, Greek shipping flying high. Our moderator is not Harris, as written on the agenda. It's Sakis Voudris, also from Neptune Maritime Leasing. And on the panel, we have George Iannakis, managing partner from Alantra. Charis Plakantonaki, chief strategy officer from Star Bulk. We have Nikos Gezepis, who's Chief Financial Officer of Neptune Lines Shipping and Managing Enterprises, and Christina Anagnostara, who's Managing Director at Axia. Sakis, over to you.
Thank you. Thank you, Kevin. So good afternoon, everyone, and welcome to this final session. Thank you to the Marine Money, Kevin, Mia. It's always a pleasure to be here. So I'm very delighted to be moderating this panel session on the title. It's actually the theme of the conference. It's Greek shipping flying high. For many decades, Greece has been a prominent place in shipping, has played a prominent place in shipping and global trade. What makes that more significant is that the country's considerable role on the international maritime stage is disproportionate to its size. The capacity of the Greek merchant fleet at more than 5,000 vessels made Greece the largest shipping nation. And despite the generational challenge of decarbonisation, Greek ship owners are in a stronger position today than at any other time since the days of the golden Greek generation led by Onassis and Niarchos. So I'll start off this panel with you, Harris. Star Bulk has been at the forefront of growing and modernizing its fleet. What are the key drivers for increasing your fleet, reducing your fleet age while maintaining high profitability? How do you plan to capitalize on these opportunities?
Thank you, Sakis, and thank you to the Marine Money team for inviting me here today. Now, to your question, Sakis, our strategy has been and continues to increase the size of our fleet, to renew our fleet, but at the same time to maintain our profitability, to manage risks, and also to deliver strong shareholder returns. Starting with the size of our fleet, we believe that there's a competitive advantage that comes with scale, both in terms of cost, but also in terms of revenues, synergies, especially in view of the increasing complexities that will come from the new environmental regulations. During the past 6 years, we have acquired approximately 110 vessels through mergers, using as currency our share issued at NAV, net asset value. The most recent example being the merger with Eagle Bulk, which took place 6 months ago, and which added another 52 Supra Ultra vessels to our fleet, bringing it to a total of 162 vessels. And as the chair of our board, Spyridon, mentioned this morning, this positioned us as the largest US-listed dry bulk shipping company and the 3rd largest dry bulk shipping company in the world. When it comes to fleet modernization, we have sold close to 30 older, less efficient vessels during the last 18 months, generating equity proceeds of around $430 million. And at the same time, we have placed new building orders for new eco, modern Kamsarmax vessels, continuing also our strategy to charter in modern eco tonnage as a means to further renew our fleet. Now, after securing the equity that will be needed to finance the new building vessels and along with share buybacks, on which I will expand in a second, we have secured a pot of cash of $80 million that will be used for future investments for fleet renewal, among others. Now, along with growing and renewing our fleet, I mentioned also profitability. We place a lot of focus on maintaining competitive costs, both operating expenses, but also G&A expenses, voyage expenses. We have been one of the most competitive dry bulk operators among our peers when it comes to operating expenses throughout the years. This is a result of talent that we employ in the office, but also lean processes and technology, which we leverage wherever possible. We aim to create also synergies on the commercial front. After the merger with Eagle, we now have commercial presence in 3 different continents, Europe, Far East, the US, and we also invest heavily the last years on safety and quality because we see from our charterers, our major charterers, increasing demands when it comes to the safety and quality of our vessels. Risk management, at any given time, we aim to keep a minimum of $2.1 million for every vessel we have on the water, and we also continue our strategy to deleverage. Our net debt at the moment stands at $870 million, and which is covered entirely by the scrap value of our fleet, and we pay down $200 million every year. And of course, it is well known that we also have scrubbers on the majority of our fleet, which provide us with additional risk management in the cases of market downturns. Now, last but definitely not least, strong shareholder value. We continue with our strategy of full payout dividend. During the last 3 years, we have given out dividends of a total of $1.3 billion to our shareholders, and at the same time, we have succeeded to buy back 21 million of shares, generating increasing value for our shareholders because these were shares that were bought at periods in time when our share price was trading at a significant discount to NAV. So all these strategies, we hope that they will position us for success in the future. Thank you.
Thank you, Haris. I think it's an impressive achievement. Nico, to you. Neptune Line is a leading provider of vehicle transportation, but they're also involved in diversified operations recently, which is logistics. How do you assess which sectors to focus on for long-term growth, and how do you ensure financial sustainability in these new ventures?
Thank you, Psyche, and thank you, Kevin and Marine Money, for inviting me here. I think the key word here is strategy. And if I may share our experience, a few years ago, we decided to make it a formal business process. So what we did is we wrote down a strategy playbook, which was approved by our board, that made us look at the opportunities and the risks in the markets that we operate, as well as our strengths. And based on that playbook, we identified 3 strategic growth areas. The first one was obviously to grow organically into our car carrier operator market. The other one was to move and grow vertically in the automotive supply chain to be able to offer integrated logistics solutions to our customers. And the third one was to leverage our ship management capabilities and our relationships in the maritime industry to grow in other shipping segments. Now, skate forward a few years, we've been able to deliver on the first pillar. We have started executing on the second one, so we completed the acquisition of the biggest automotive logistics company in Greece last year, and we are working hard to finalize an agreement that would make us a car terminal operator in a Mediterranean port in the near future, which we hope to be able to disclose in a few weeks, have some positive developments. And for us, when we look at the financial sustainability of those growth strategies, in the terminal case, we've talked with several of our customers to understand the level of interest, so we have a high degree of visibility on the business case that we've underwrote. Now, the third pillar of growth, which has been to diversify in other shipping segments, which is something that we did in the past when we got into dry bulk. This is something that, even though we've spent a lot of time analyzing different asset classes, we haven't been comfortable with the risk-return profile that we've been seeing, or the break-even levels that would enable us to, stick in for the long term and ride the volatility. So I think, to your question, it's more about, looking where we can add value and what our strengths are, and it has to go beyond just merely providing capital.
Thank you, Nico. Christina, switching a bit subjects to banking. You've been advising shipping companies, and particularly Greek shipping companies, on raising capital. Where do you see the capital markets trends today in relation to shipping, and how can Greek shipping companies navigate them to take full advantage of all the liquidity available out there in the market?
Thank you. Can you hear me? Thank you, Tsakis. Thank you, Marine Money, for inviting me today. Unfortunately, this subject has been covered in the previous sessions, but I will try to give, let's say, a recap of what was discussed earlier today. So
it's always pleasant to hear your thoughts.
So, as we speak now, shipping is a highly capital-intensive business, and we know that the sources to fund this is through equity, through bank financing, sale and leasebacks, and also capital markets. We have covered all themes today, so as far as equity is concerned, we know that for specific types of transactions like your assets with long lives and long charters, there are certain infrastructure funds that can provide equity and they can stay for long periods of time. As far as sale and leaseback is concerned, we have seen that since 2010 that many banks have withdrawn from the financing of the shipping sector. We see that they have replaced them, so we have a lot of sale and leaseback activity also from China, but as well as from Japan. Also Chinese banks and Taiwanese banks being players, and the Greek banks, given the fact that due to the very rich cash flows of the shipping companies, that they have proceeded with repayments. They're offering very low margins, and they try to stay in business, offering very competitive prices. So another option, as we said, is capital markets. Capital markets, until now in 2024, we have seen very few IPOs, basically 2 only, happening in the US, and very few follow-ons, being SFL, Dorian, and Hunter in Euronext. We have seen a lot of activity in the Oslo markets and OTC listings. But what is really now very trending is the bond market. So we're seeing over 30% increase in the issuance of bonds throughout the course of these years at longer tenors than the ones anticipated in the previous years, plus adequate financing, in terms of cost of capital.
Indeed, it's been an active bond market, but also banking market.
Yes, so basically I think it's what is important for the ship owners is to harmonize their capital structure, and depending on their needs and the projects that they have on the pipeline, to keep all options open, maintain relationships with all the various types of financing, either in the private markets or in the capital markets. I see that there is more, as we speak now, the alternative lenders are covering the space, and actually they're also squeezing their margins a lot. And depending, as we have said earlier, depending on their needs, they need to stand by and assess which solution fits best for them.
Thank you, Christina. George, Alantra has been very active recently in providing advisory, but also arrangement services to shipping and offshore companies. Liquidity levels are quite high. Yeah, liquidity levels are very high. Banks are willing to finance. So what are the key financing strategies you recommend to your Greek clients to sustain growth, innovation over the next 2 years?
Thank you, Saki, and thank you again for inviting us and arranging a great day. I think the advice is the same across all nationality of clients. I would say the same thing, that when there is, there is definitely abundance of capital availability in the market. The shipping world, compared to the previous times of very strong markets, if you look back in the 07, 08, is definitely significantly less levered as a market compared to where asset prices are and levels of debt, as we also heard from the other people in the panel. But it's very important that borrowers keep their funding relationships. We have a lot of clients that they say, well, why should I get financing if I don't need it? Financing is not just availability of capital when you don't need it. It's also availability of capital when you need it, right? So if you just go out of the market and have very few or zero funding relationships, when the market will be, and it's a cycle, it will become less available again. Then the market has forgotten you, and you haven't, you've broken this relationship. So the strategy is they should always keep, a very prudent financing strategy in terms of having debt in the balance sheet, but you should never, be massively under-levered in that sense. There are opportunities in the market. You can deploy capital, definitely less than before, but there is definitely still out there.
So relationship banking, it is paramount.
It's not exactly relationship banking. Relationship banking has a bit of a weird meaning. It means that someone will lend you based on the name and not based on the quality of the project. Is basically keeping relationships with your financiers. It's a bit different quite different actually than relationship banking, I would say.
Thank you, George. Nikos, back to you. As CFO, what are some of the key financial risks you foresee for shipping companies in the near future, and what strategies are you implementing to mitigate them while expanding your business?
Yeah, thank you, Saki. Well, look, first of all, our business model is that of a liner operator, which means that we get to see a bigger universe of voyage expenses than the traditional shipping company, based on that, we have developed a number of risk management strategies to hedge our exposure in fuel, our exposure in the euro-dollar, which is actually inverse from what most shipping companies in Greece experience, because our business is euro-denominated in a dollar-denominated world in shipping. But also, in interest rates and carbon prices now with EUAs and the upcoming fuel EU regulation. So I think there are some risks that are common for all shipping companies. Interest rates, for instance, went from 0% to 5.5% in a matter of 15 months. There's the carbon price risk and the regulatory risk that is constantly evolving. But I think the first step one should take on a risk management exercise is to actually measure the risk. So for us, we do that annually. We look at our exposure across the different commodities, different sort of risk parameters, and we also determine, our risk appetite. So how much residual risk can we bear? And there's a lot of different statistical and financial ways to measure risk. You can do expected loss, valued risk around Monte Carlo simulations. But I think what's important is to identify and measure that risk, and also be honest with yourself and think, how much risk you can bear. I mean, for us, we're in the business of transporting cars, so we want our performance to be measured by our ability to transport those cars. We don't want our results to be driven by what the dollar did or what fuel prices were. So it's important to hedge those risks away. And again, in our case, we do that by implementing two strategies. One is to do natural hedging, so if I may call it so. So have business clauses in our contracts that enable us to share those risks with our clients, and we've done that with bunkers. We've done that with the environmental compliance cost. And then on the risk that we cannot, pass through to our customers, or the residual risk that's not fully covered through our business arrangements, then we go into, various trades with a number of financial counterparties, employing either option strategies or straight forwards to manage that risk.
Yeah, excellent. Thank you, Nico. Harris, a question for you on sustainability. Your favorite topic, I presume. Sustainability is obviously increasingly important. And what steps is Starbuck taking to align with global decarbonization efforts while maintaining your competitive edge in shipping and in dry bulk in particular?
Thank you, Sakis. I can never avoid the decarbonization question, can I? So I've already spoken about our fleet renewal program. We're selling older, less efficient vessels, placing new building orders for modern eco-tonnage, but also chartering in modern eco-vessels which have improved consumptions. Just to mention examples here are new building orders. These are vessels with new main engines, with shaft generators, therefore with improved consumptions. Now, of course, we cannot renew our entire fleet overnight. So we have to look into measures that we take also for the existing fleet, because we do have these global targets for 2030, 2040, 2050. Any solution that today has a payback period and makes sense in terms of bunker reduction and emission reduction, we will invest in. Our number one priority is hull maintenance. We see significant savings in bunkers from keeping the hulls of our vessels clean. We perform frequent hull inspections, frequent hull cleanings. We accelerate dry docks whenever required. We pilot and test technologies around remotely automated hull cleaning robots. We see a lot of potential in that technology moving forward. Technical solutions, energy-saving devices like ducts, post-cap fins, propeller redesign, replacement, power limitation, shaft power limitation. These are solutions on the technical front that we implement, we retrofit on our vessels, again, whenever it makes sense financially in terms of payback period as well. We leverage technology, artificial intelligence, in order to gather data from our vessels, but also to analyze large set of data. We have a dedicated vessel performance monitoring team in our office. We have deployed telemetry and sensors on board many of our vessels. We analyze this information. We aim to take prompt action whenever we see cases of overconsumption, whether these are technical issues or operational issues. We try to tackle them in order to avoid overconsumption and therefore reduce emissions. We work a lot with technology providers on speed optimization, weather routing, but also optimal arrival in ports in order to reduce idle time. Now, as of January 2025, we heard in the previous presentation about the Fuel EU regulation. We plan to comply with Fuel EU by burning biofuels for the vessels that will be trading in and out of Europe, and we expect that a similar measure will be adopted also at the global level as of mid-2027. So we expect that we may need to burn biofuels also during global trade. Now, as to the other green fuels, the hydrogen-derived fuels, methanol, ammonia, we stay close to developments, but we do feel that there are certain, there's still uncertainties related to these fuels. Therefore, we haven't made any investment decisions yet. We do monitor developments. One technology, looking further ahead into the future, that we do think is promising is carbon capture and storage. We have pilots on that front. Of course, there are challenges there as well. For example, additional energy required to operate the CCS systems on board. What happens to the liquid CO2 that you capture? How do you offload it? What is the supply chain thereafter? Still, we do believe that CCS in the future will be needed in order to complement the greener fuels, which is very likely that at least for the first years they will not be 100% green. It is probably they will be first blue before they become green. Last but definitely not least, we try to be extrovert about everything we do on the decarbonization front, because as it is well established by now, this is not something that a single company can achieve alone. So we participate in a number of global fora. We recently, a few months ago, established also the Athens-based Maritime Emission Reduction Center in collaboration with Lloyd's Register and other leading Athens-based shipping companies. This is an initiative that will aim to develop and accelerate technologies that reduce emissions from the existing fleet. So this is one more area where we try to devote resources in order to maintain a competitive edge when it comes to our decarbonization efforts. Thank you.
Thank you, Haris. So, Christina, consolidation is the favorite theme of shipping for many years. And we see that it's happening. It is happening in many sectors. Do you see any potential for M&A activity in the Greek shipping market? Which sectors? And what would be the key drivers for such deals to happen? And I mean, obviously, what's your role as AXIA, as one of the leading banks in the sector?
Thank you, Sakis. So, M&A activity is taking place because of consolidation, as you want to say, and also basically and diversification, not only in terms of fleets, different sectors, but also businesses and new continents. As some of our fellow previous panelists said, you need to have willing sellers because shipping is a different business than others. So mainly the M&A activity is not driven by management teams, it's by the shareholders or sponsors, meaning a sponsor wanting to exit from a particular owning of a company, or you have inheritance issues, succession issues. So this is driven basically by the sponsors. You need willing sponsors, and you also need to have fair valuations. So from the transactions we have seen in the past, and there are a lot of transactions taking place, I think the sectors, you see transaction in all sectors. There is a lot of activity. The most important thing is, first of all, as I earlier said, the valuation, but it's also very important to, to run a process in a very professional way and be able to follow certain steps in this process. So we are seeing, as AXIA, we have been involved in mainly in M&A transactions. These transactions last a long time. I will give you an example with the merger of UOG with UACC, that's a Dubai-based company. This was actually a triangular reverse merger structure, the first under the UAE laws. It took more than 2 years, but both parties were willing, were corporate, they were willing to follow a process in terms of valuation, and all the steps were taken appropriately. We're still working on another transaction that is with, again, we're working as advisors to a shipping company for the acquisition of another shipping company based in Europe, that again has, the main driver there is the succession issue. And in the past, we have also worked in other transactions that involved acquisition of LNG vessels, tankers vessels, fleet, that at some point of time, they were pulled back because of the valuation. As far as the public market is concerned, it's always good to have big companies because you can use share due to the discount of the price to NAV discount, as well as the peer group valuations. You can also have, you can use your share to make a merger and to proceed. But in the private sectors, we see that the majority, they want to cash out. And these are the driving forces. So yes, we see a lot of activity, and we believe that we will continue to see activity in all fronts.
Thank you, Christina. Okay, thank you, Kevin. So George, diversification is another favorite strategy for all kind of investors. And from your perspective as an investment bank, how do you assess and support diversification in other sectors, for example, offshore, gas? And what risk or rewards do you see for investors to be part in these sectors?
Thank you. I think it's quite common that ship owners in their core sectors, they've made, pretty much every sector in shipping had a great run. So everyone has accumulated significant capital, either through operation or through selling potentially their vessels. So it's a big theme. Where do you put the money that you make and how you diversify? I think we've been quite focused and probably pioneering a bit the wave of let's say international European and also Greek ship owners investing in the offshore space, including a very recent transaction where a large Greek shipping group invested in a Middle Eastern offshore company. And we see that trend because, especially you mentioned the offshore space, it still has very attractive fundamentals, probably the most attractive fundamentals than any other shipping sector currently in terms of simple demand and supply, lack of new building, and all the usual things that you tend to see in a cyclical sector. So the diversification game is definitely there. I think the offshore with a bit more focus on offshore oil and gas, which is also quite far from over, is definitely a theme. I think on the gas side, we've started seeing that the market is getting a little bit more crowded. So I think less in terms of valuations, in terms of dynamics of supply and demand, it's slightly less attractive from an opportunistic standpoint. But gas projects tend to be very long-term projects, so you need to invest with a different view compared to more traditional shipping investment analysis that you would have. So that's on the sectors. The other, I think, thing that people need to keep in mind is geographical diversification. So expanding their presence to growing markets by investing in shipping companies or assets that are a bit more focused to a certain jurisdiction, that being Middle East and Southeastern Asia and the Indian subcontinent, which are probably the markets with the biggest growth, both GDP related, but also shipping demand related compared to the rest of the world that is definitely lagging in terms of that growth. So building presence in those regions, even in your core sector as a ship owner, can be quite value add and make more money on the long run.
Interesting. Thank you, George. I think we're running out of time, but I've just one last question. I think it's good to end a session like this with an open question. So let me ask all the panelists, how can Greek shipping maintain its competitive edge on the global stage in light of rising competition from other maritime hubs? And what role do innovation, technology, partnerships play in this regard? And why don't we start with Nikos?
Thank you, Harry. Well, let me just start by contemplating why we've been so successful as a maritime hub. Right? I mean, we as a nation, we control 20% of the gross tonnage globally, and our economy contributes 0.2% of the global GDP, which means that we're punching 100 times more than our weight. This is not by accident. And I think the answer lies in our ability to attract top talent and our success in building this ecosystem in Greece. So to remain competitive, I think we need to look at our strengths and also look at where we are in the value chain and try to capture a bigger portion of that value chain. For instance, there was an article I was reading in the summer. We are the, we take pride in being, some of the most skillful ship managers in the world, but those tend to be captive units within the shipping companies. And we are, Athens is, the biggest ship management center in the world. We manage 5,000 vessels, of which 90% are Greek-owned. So only 10% is what we commercialize, this fundamental strength. So I think that's a very natural step in further growing our presence as a maritime hub. Harry's, talked a lot about decarbonization, and we tend to think about decarbonization as a problem instead of a business opportunity, right? I mean, it's going to take, all these energy-saving devices, all these alternative fuels, all these, route optimization softwares, all these alternatives. It's a huge market opportunity, and there's no reason why the next champions in these segments shouldn't be from Greece, because there is such a big captive market in Greece to serve as a testbed.
Indeed, it's a big incubator, I would say. Christina, a couple of words?
Of course. I agree with you, and I will also add that we need also to expand the dry docking area and all the activities, related activities. We have very good workers. We're doing great job. Why not to expand and have also yard repairs and, have also the government support from that, but establish Greece as a center. It's very important also. We are also a marine hub in terms of new technologies. We can further strengthen and develop and finance all these new technologies and move further and upgrade. I will let also the other fellow panelists to comment. A general remark would be that it will be good to follow also. I think we're doing a great job and we can definitely strengthen it, but we can also see the example of Norway, and we need to create a framework that, you know, it's embraced by the government, by the stock exchange, have analysts, education, tax incentives, regulators. It's a pity that we don't have in Greece such, you know, a replica of the Norway of Oslo Stock Exchange, and this is left out to all the other countries.
Great, sounds great. George?
I completely agree with you, by the way, on creating a framework of investment that, because in reality, I'm sure that many people know, there is a number of smaller investors behind a number of shipping groups. So it's actually there, it's just not regulated, and so it's the investors' appetite and understanding is there. We just need to, you know, make it more efficient. I would only add that especially now with the creation of wealth that Greek ship owners had the opportunity to build, is to focus a bit more on investing in more infrastructure-related shipping, with the exception of LNG. Most of the shipping is what we would call conventional shipping. So expanding in other countries and also utilizing Greece's geopolitical position from a logistics standpoint to actually grow that market more. And invest, as we said before, offshore or port services and other ports around the world. There is no reason why, if you have 20 times the ability of the Greek GDP, that you don't invest in something like that to grow the relevance of Greece in other countries also, not just here.
George, thank you. Excellent ideas. Harris, you have the last word.
Thank you, Sakis. I will agree with all my fellow panelists. I think that Greece has a fantastic opportunity ahead of us in order to further strengthen its position as a global maritime hub. We can follow the steps of Singapore in terms of creating a maritime ecosystem by attracting services related to shipping across the value chain, follow the Norway example also with regards to greening, short sea shipping. We can provide incentives in order to develop R&D around green energy, around digital tools. Very important, we can further invest and expand maritime academies, both for shore employees but also for seafarers. So these are just a few examples of how Greece can further strengthen its position and maintain its competitive edge globally. One final word I would like to leave you with is that the majority of Greek shipping companies are small, medium-sized companies. And moving forward, the new regulations will increase the costs of operation for these companies. So it's very important that Greek shipping companies engage in partnerships, they pool vessels, they pool their fleets in order to be able to comply with the new regulations, to reduce compliance costs, but also to reduce the administrative burden that will come about from these new regulations. We have FuelEU ahead of us. We will have the global measures in 2027. So Greek shipping companies should join forces, pool their fleets, and increase their scale in order to be able to comply and be competitive in the global arena. Thank you.
Thanks very much, the panelists, the Marine Money. Thank you all.
Okay, Saki, thank you very much, Sakis, and the final panel. That brings to an end our conference for 2024. Thanks to all our speakers, to all our sponsors, to all of you for being here. We look forward to seeing you again next year. And in the meantime, you're welcome to join us for the closing cocktail. The closing cocktail, which is in the same room as lunch. It's kindly hosted by the Marshall Islands Registry. And later on tonight, of course, the Capital Party. Thank you very much.